Hi, I'm Max Keiser. This is the Keiser Report. You know, facts are facts, and sometimes they're just easy to see, and sometimes they're not. Hello, I'm Max Keiser. Stacy.
Right. The fact is, this episode is going to be amazing, right? Because first, I do want to call attention to some information that came out in the past week. We haven't had a chance to cover it until now, but it's really important and it fits with basically our coverage for the past 10 years, but especially the past few years as we are in this money printer go brrr era, and the wealth and income gap is causing. And you could see that in the Federal Reserve's own data. And we keep track of this every quarter or 2 quarters whenever they're publishing the information with a real shocker. So, ouch. America's middle class now holds a smaller share of U.S. wealth than the top 1%. Middle class financial security has eroded in past decades, saw their combined assets drop to 26.6% of national wealth, while the top 1% wealth jumped to a record 27% of total. So this pink line there is the middle 60% of Americans. And as you see, their wealth has declined from near 40% down to just 26.6%, and that's the top 1%. And as you see, their wealth has climbed and climbed and climbed. The more the money printer goes brr, this is during the financial crisis, the beginning of it. And you see that the money printing has definitely helped the top 1% the most.
Right. So it gives rise to the question about these crises and who's behind them. We had the subprime crisis that resulted in money printing that made the top get richer. We have the COVID crisis, which has resulted in the top getting richer because of all the money printer. We had a war in Afghanistan go on for decades, which it resulted in money printing and the top get richer. You know, and then you can get into the other, you know, into some other areas as well of really making hard questions. So that needs to be emphasized, because when you look at the mainstream media, they try to portray these financial outcomes as somehow being organic or natural to the nature of markets and to economics, to capitalism. But that's completely false. This is a story written by thieves to benefit thieves. And unfortunately, America's middle class, they're going to get wiped out and they won't have any recourse.
What you're saying is that, you know, Obama, remember when he inherited this economy and the financial disaster of 2008, 2009, what he said is we need to look forward, not back, i.e. that there would be no justice for the crime that happened. And so therefore, it never got fixed. There's no incentive to fix the problem if the elite who run the institutions, who run the media, who present the news and try to explain to the population what is happening, they're always going to have a sort of excuse. It's outside forces that are the responsibility that are causing the problems domestically. It's not the money printing, it's outside forces. It's not us, the elites. It's not the media. It's not, you know, if they're all making 10, 15, 20, 30, 40, $50 million a year as a talking head on one of the news programs to tell you what to think, are they going to care more about somebody that they themselves deem a deplorable who's making $50,000 a year out in Iowa somewhere? Or are they going to care about their friend who's making $50 million a quarter in Manhattan? They're going to, you know, they're going to be more kind in their interpretation and explanation of what's happening in the economy and what that data shows in that chart. They're going to find an excuse. They're going to find a way to excuse their friend, right?
Right. And it's not a victimless crime, as they would like us to believe. I mean, people are dying. Obviously, 90,000 opiate overdoses, a direct result of this type of wholesale thievery. I mean, imagine living in a country where arsonists, for every house they burn down, the central bank gives them 10 new houses. I mean, that's the country we live in. It's called America.
Well, certainly they would be the biggest property owner by the end of their crime spree.
Let's call BlackRock the biggest property owner in America.
Right. And I want to turn now to another story, because when the money printing goes to the top. They get it first, 0%. They get to buy the assets. That all the continuation of the money printing increases the price of assets, increasing their wealth. But inflation hits, and inflation hurts the working class the most because they're living hand to mouth. They don't have that much money left over to save. And when the meager savings you have is eroded through inflation. And you see that in this data coming out of Germany. Good morning from Germany, where inflation pressures keep rising. Germany's wholesale prices jump 13.2% year on year in September versus 12.3% in August. This was the highest monthly annual rate of change since June of 1974, after the first oil crisis. From August 2021 to September 2021, wholesale prices rose by 0.8% month on month. And you see the parabolic move right there. And yeah, it's looking like back then it was the oil crisis. We're having a similar situation. We're having a money printing crisis.
Right. The temerity or the arrogance of the money printers is that the inflation that they knowingly create can be controlled. Right. History tells us that you can never control it. Whether you're talking about the crisis of the 70s after Nixon close the gold window, or you go back to Weimar Germany, or you go back to, or you talk about Zimbabwe or Venezuela or Iran or now Turkey. When you print money at that speed, and no one ever stops printing money, and it's shocking that Germany is falling into the same trap that they fell in during Weimar Germany, as if they learned nothing from these years over there at the ECB, and the outcome is guaranteed to be the same: the rise of ideological psychosis.
Well, you mentioned Venezuela, Zimbabwe, Iran. Of course, they were also part of their inflation, hyperinflation. It's a political event. Hyperinflation is a political situation, and they were subjects of sanctions regimes. So in a way, you kind of have seen that since 2008. There's been sanctions regime essentially on money flow to the bottom 99%. They've been cut off from the liquidity of the global financial system, all that money printing. We've had a little bit of fiscal printing in the past year or two, and that's unleashed the inflationary gates. But also we have the lockdowns and the supply shock. It is essentially like a sanctions. You're being cut off from supply. And we're seeing that, as we prepare for Christmas, you're starting to see Christmas decorations everywhere and Christmas lights outside people's houses in the neighborhood. And what we're seeing here, this is a pretty shocking story in terms of this sort of neo-feudal system where these like very, very fabulously wealthy, and I don't think these charts really capture that, of the 1% versus the 99%. It's like the chasm between them. The chasm is like widening so shockingly. Biggest US retailers charter private cargo ships to sail around port delays. Home Depot, Costco, and Walmart resort to private charters and a push to stock shelves for holiday shoppers. So this is from the Wall Street Journal. And the important thing to remember is that small and medium-sized businesses can't compete with that, right? So not only did the banks get bigger, the big banks got bigger since the financial crisis, thus tightening the screws of the sanctions essentially on credit and liquidity to the ordinary person, because they don't want to deal with a deplorable with, $10,000 to their name. They want to deal with the elite with 10 billion to their name, because that's they don't have to get out of bed and work for that, right? Here, the same thing. It's like the money printing went to the ordinary person, and they're spending on all these durable goods. There's supply chain disruptions all over the world because of the lockdowns, and now the biggest of the retailers need supply for Christmas, so they're chartering their own container ships and going to get the goods and then bringing them to smaller ports. New York and Long Beach are all like, there's a 6-week long lines or 10-week long lines to get in. So you're not going to have supply for Christmas. The small and medium-sized enterprises aren't. The small retailers, the big retailers, they're circumventing that.
Right. And Costco's and the Walmarts to charter their own container ships to move goods from Asia to America. Of course, that's very expensive. And you would normally think that that would hurt their earnings. But because the money that they're using to charter these container ships is borrowed from the central bank for nothing, they're charged 0% interest, and their earnings are not impacted. As you point out, well, simultaneously they're buying back their own stock with the same 0% interest. So it actually is accretive. Their earnings go up. Simultaneously, all that money printing is trickling down to the bottom of the economy in the form of inflation. Stuff costs more. So this is an example of capitalism as we understand it here in America at the 21st century blowing itself up, because the inflation trickling down to the people who are supposed to be buying this stuff will get to the point where they have to borrow money at 18%. They can't borrow money at 0% to buy the stuff that's being manufactured with borrowed money at 0%. So that's the interest rate apartheid. So at some point, when it becomes clear that there's a permanent underclass of untouchables in America, 200 million of them, they can't afford food or energy, that's when things get really, really dicey.
I'll go on the international level. Yes, there's a domestic situation. Yes, there's a domestic civil war sort of story that's a cultural war. But globally, remember, even the poorest of Americans are the wealthiest of the world, and they're getting loads of free money and they're spending it. And that's part of the global supply chain disruption. They don't have to work because they have a lot of money. They have stimulus checks. They have enhanced unemployment. They have these child credits coming in now too. So there's a huge demand. They're consuming a huge amount. And that is what was brought up by the CEO of Maersk, right? One of the biggest shipping container companies in the world. He contradicted what JP Morgan's Jamie Dimon said. Jamie Dimon said, yeah, not only is inflation transitory, but the supply disruptions are transitory. The Maersk guy, the CEO, said, no, that's not true. In fact, this shipping crisis will continue until demand slows down, because there's way more demand than ever before. And that's why it's taking 80 days now to cross the Pacific. You know, China to the west coast of America is the most important of the shipping lines. It takes 80 days now versus 40 before the pandemic. So you have the pandemic, but demand. And also these giant companies like Costco, like Walmart, are spending twice as much. It costs twice as much per container and more. It starts at twice as much to ship versus the old pre-pandemic price, or even those who are paying for the slow delivery.
Right, I get what the shipping magnate is saying, but referring to the original chart, the concentration of wealth amongst the very top, because of this uneven distribution of free money, is leading to global insurrection against banker occupation. Giabo, as we've been saying now for 10 years. We're going to take a break. When we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Nick Giambruno. He is an independent analyst of all things geopolitics and economics. Nick, welcome back.
Hey, great to be with you, Max.
Of course, Nick, whenever we chat, I think back to when we first met in Beirut, in Lebanon, many years ago, almost 20 years ago. I suppose we got to talk about Lebanon because I see images of armed conflict on the streets. You were a longtime resident in Beirut. Do you have any insight into what's happening there at the moment? Running gun battles, banks being burned down as hyperinflation hits savings. What can you tell us?
Yeah, there's a lot to unpack. What happened recently is the Lebanese experienced a rug pull, a financial monetary rug pull. And what I mean by that is they woke up a while ago to find that their savings were locked in the bank. They couldn't access their life savings. The currency experienced hyperinflation, and it's a mess. And you layer that on top of all of these other crises. I mean, there's sectarian tensions, regional tensions. Lebanon is in deep trouble. But there is light at the end of the tunnel here, because what has happened is that it has spurred an interest in Bitcoin among the community there. And that could really help the people of Lebanon get out of this mess if they really look to that and look to a form of money that is not nobody can inflate it. It's totally resistant to inflation and allows them to interact with the outside world. Also, I might add too, is that the U.S. is involved in this as well, the U.S. government, because they're not too fond of this, the Lebanese government and who makes it up. And so they've been turning up the sanctions, turning off the dollar flow. I mean, it's really incredible how when the U.S. wants to pressure a country, they just turn off the flow of dollars, and it can really mess things up there. So that is definitely an ingredient there too. And that's why Bitcoin is so important, because it bypasses all of this bad stuff in Lebanon. So we'll see what happens. You and I and Stacy spent some time there. Of course, Saifedean Ammous, our mutual friend who wrote, the Bible on Bitcoin, the Bitcoin Standard is from there too. So this has helped spur a not insignificant community of Bitcoiners there. And that is a genuine ray of hope.
Now let's talk about a place in the North Atlantic. It rains there a lot, and they've got a central bank, the first central bank chartered in 1694, I believe, the Bank of England. Yes, the Bank of England. A policymaker over there has warned that Bitcoin could trigger a financial meltdown. Does this sound like the sort of blame game you might find somewhere like Argentina whenever they default on their debts by blaming others? What's going on, Nick?
Yes, it clearly is a sign of desperation. I mean, on the one hand, these folks, the central bankers, are disparaging spent years disparaging Bitcoin, calling it names, ad hominem attacks. So how does it all of a sudden magically go from this online thing that they don't understand, that they're making fun of, to an existential threat to central banks? That's a pretty big jump. I'd say that's kind of a capitulation in their view of things. So yes, and he's not wrong. Bitcoin is a threat to central banks, and central banks deserve to be threatened, because what they're doing is perpetrating, as you guys have well covered, a fraud of historic proportions. So excellent. And if he wants to try to take on Bitcoin, say good luck to him. Bitcoin will not be harmed and emerge stronger. But yes, it does threaten central banks, and it's interesting to see them really, for the first time, explicitly recognize that.
Right. The Bank of England died. It just hasn't been buried yet. And the whole banking establishment is going through the 5 stages of grief. I believe the second one is anger. Soon they will be dealing with trying to make some kind of trade-offs with Bitcoin. Then they're going to eventually capitulate, as you say. This is the process everyone goes through. It just so happens that El Salvador, because it's run by the George Washington of the 21st century, Mr. President Bukele, got to the promised land first. Because going back to this whole region in the Latin American region, Argentina, which is a country you know very, very well, are they currently on their 18th or 19th default, Nick?
Oh, it's I've lost track of counting. But something interesting about Argentina, it's because they've had so many financial rug pulls in the living memory. People don't trust the banks. They don't trust the currency. It's actually a very fertile environment for people to learn about Bitcoin. I spend a lot of time in Argentina, and the people here, just the regular people, are more receptive to it than in any other country I've seen. And I think it's because of these experiences they've had. Also, that's manifested itself somewhat into the political situation too, because there was a recent primary here where a candidate who explicitly wants to abolish the Argentine central bank and abolish the peso and let Argentines use whatever currency they want, he got 3rd place and 13 or 14% of the vote and in the primary. And this guy is rising fast. So this is, and he got support among, kind of the poorer community across all areas, but in particular, the kind of the poor people who generally wouldn't go for this kind of a guy. So this is a very interesting development. And if he gets closer to power, like I said, he explicitly wants to abolish the Argentine central bank and let any kind of free market currencies compete. And, you and I know who's going to win that competition. What's the best money that mankind has ever known? It's Bitcoin. Of course, if you're going to let monetary competition, Bitcoin is going to win, just like a lion, chases after the gazelle in the African countryside. So something very important to watch here in Argentina.
Yeah, all these central banks, whether it's Bank of England or the Fed or Bank of Argentina, they think that somehow Bitcoin is triggering a crisis, not understanding that Bitcoin was a response to the crisis. The crisis was central banking. Bitcoin is a response. It says right there in the Genesis block, Chancellor on verge of second bailout for banks. It makes direct reference to central banks' malfeasance and crisis. So, but they'll learn and they'll get the price they deserve. They don't want to buy Bitcoin at $500,000. They don't want to buy it at $1 million. They'll stumble in at $2 million. God bless them. Now, J.P. Morgan and Jamie Dimon, probably the poster child for Bitcoin idiocy, recently reported that their institutional investors are buying Bitcoin rather than gold as a hedge against inflation. So, Nick, this is a growing talking point, is that, people are now actually beginning to recognize that Bitcoin, it not only kind of competes with gold, but it's actually vastly superior to gold. What's your thoughts?
Yes. Oh, a lot to unpack here. First, it's another remarkable capitulation in opinion. I mean, JP Morgan and these banks, they live off of the fiat easy money system. And why, that's how they get their wealth, is through that whole system. So for them, they've gone through another dramatic change in opinion after years and years and years of disparaging Bitcoin, mocking Bitcoin, promoting false narratives, this blockchain, not Bitcoin nonsense. Now they're taking this point of view that it's, hey, wow, it's competing with gold. That's that's remarkable to notice that change of opinion. And I don't think that, I think they're being forced to do it because we saw what they did in the previous year. So they're being forced to acknowledge reality. But no, it's very important because most people don't think about what money is. It's incredible. You have billions of people on earth, and how many of them really think about hey, what is money? What makes for a good, just the basic stuff. So that's how you have to look at gold and Bitcoin. You have to first understand what is money. It's not complicated. You don't need it to, go to college. It's very simple. Anybody can grasp it. Money is something that's useful for storing and exchanging value. That's really all it is. It's nothing complicated. So you don't need to understand all this jargon that is just there to really obfuscate and confuse people.
Yeah, definitely. Like Jamie Dimon. He went on the news recently sounding like some drunk longshoreman talking about, hey, the Bitcoin and them algorithms. I put it in my pipe and I smoke it and I fell in where am I? Who am I? What is this, a bank? He sounded like he's ill. He's so stupid. He should be hospitalized. But nevertheless, God bless him, because he's only going to make the price go exponentially higher. Thank you very much, Jamie. Now, we've covered gold for nearly 20 years. Nick, we've been talking about gold. And one of the things that comes up in the gold community is that, well, if only they stopped manipulating the price, it would go higher. Why don't they just admit that there's nothing going to stop the manipulating of the gold price and just buy Bitcoin, Nick?
Yes, and I think, it's an interesting point because, look, in the past year, the U.S. government has printed more money than they have in all of their history. They're printing $120-something billion a month. They printed $3 to $4 trillion since the start of this hysteria. That's the most favorable monetary environment for gold that has really existed in anybody's lifetime. And what has gold done? It's basically flat in the most favorable environment it's had in anybody's lifetime. That's incredible. So yes, and we'll look at Bitcoin. Bitcoin's up 5, 6, 7x in the same period. So yeah, it goes back to also what we were talking about, looking at the monetary attributes of gold and Bitcoin. And I think to condense this down to the one single most important monetary attribute is hardness. People don't understand what that means. So let me kind of unpack it. Hardness doesn't mean something that's tangible, that's physical. It means hard to produce. That's what a hard money is, hard to produce. Easy money is easy to produce by contrast. Now, gold has always been the best form of money in the past because it was the one commodity that was the hardest to produce. And you can actually quantify hardness. It can be measured. Hardness can be measured. And you measure that with something called the stock to flow ratio, which is you look at how much of the supply, how much of the new supply is relative to the existing stockpiles. If that new growth is small, that means that it's not an easy thing to inflate. Hardness can also be thought of as resistance to inflation. So that is, in my opinion, all the other monetary attributes are secondary importance to hardness. So you can quantify that. Gold stock to flow ratio is about 58, 59, something like that. That means it takes about 58 to 59 years of current production to equal the current stockpiles. It's not easy to do that to gold. It's the one commodity most resistant to that process. Now you look at Bitcoin. Bitcoin has a stock to flow it's about the same. It's about 57-ish. I mean, it's very close to gold's. So if you look at the most important monetary attribute, Bitcoin is neck and neck with gold, but in 4 short years, there's going to be a quantitative hardening, a halving, what I like to call a quantitative hardening, and then Bitcoin's hardness is going to be double that of gold. So that's the most important factor to watch here.
Nick Giambruno, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, Nick Giambruno. If you want to catch us online, do so. Until next time, bye, y'all.